If you were trading back in 2008, you probably remember the feeling. It wasn't about charts or indicators. It was that sudden sense that something had changed. Markets stopped moving in an orderly way and really started moving fast and hard. But price didn't just move, it dropped. And that's what January 30th of 2026 felt like in the metal sector. Gold, silver, platinum, palladium, and copper all dropped sharply in the same session. And it wasn't really a normal pullback, and it wasn't a dip, and it wasn't profit taking. It was a repricing event driven by leverage, forced selling, and fear, the same ingredients traders saw during the 2008 financial crisis. But before diving in further, it's important to clear up one thing. Futures markets don't have a traditional market cap like stocks. Maybe you've heard numbers being thrown around about trillions lost, but futures work differently. What we can measure very clearly is how far prices moved and what that meant in real dollars per contract, and those numbers tell the real story. April gold dropped $609.70 in a single day. That's a decline of roughly 11%, and on the $100 an ounce contract, that equals $60,970 per contract for just that market. March silver, this was the wild one. Price fell 35.898 points in one contract. That's more than a 31% drop. And with the 5,000 an ounce contract, that's $179,490 per contract in a single day. And look at this, it broke through my support zone. It also broke through my support level, even the daily chart 50% level, and bounced, and now it's trading in between those two levels. April platinum was another big one, down 496.7 points. Another massive move. And this market moved nearly 19% in the session. That's a $24,835 move per contract coming into my weekly zone, tapping the bottom of it, and partial filling of this wick here off the daily chart and settling the session right at the top of this weekly chart support zone. March palladium down 315.50 on the session, another massive move. This one down 16% on the day. That's $31,550 per contract. Again, breaking through support levels into a wick zone here, also breaking this weekly chart support level, but eventually moving back up and settling the session just above this daily chart support level. And finally, copper. Copper held up better than the rest, but it still cracked. It fell 2,795 points, or roughly 4.5%. That equates to $6,987 per contract. You can see how it broke through this level, this longer term level, and this level, and bouncing off of it and settling just below that mid level. So there you go. What an explosive move in the metal sector. Now, this type of move doesn't necessarily mean we're in another 2008 style global crisis, but it does mean the behavior of the market looked very similar, and traders should respect that.